right, guys, we're on a roll here today. We're doing another update video on NCR. NCR is down quite a bit here today. We've been talking about it on the Discord. At least, some of you have been asking me about it. And again, that's an invitation. If you guys want to, you can join the free Discord community down in the comment section below. You just have to answer 3 questions to kind of vet and make sure no bots kind of enter the system. And it's a good community for everyone to share their thoughts, share their investment thesis, help each other grow, and the like. All right, so let's take a look at NCR. What the heck has it been doing here today? So we're going to talk about also the old videos, as always, kind of continuing with this theme of accountability. We're going to see what did I say last time, and I'll actually say I was kind of full of it with what I said last time. You'll see why, and I'll kind of highlight that. So keep watching if you want to see the future Fabio kind of scold the past Fabio for something that this Fabio said. Well, I can't scold because I'll explain it. We'll get there. All right, so taking a look at what happened here today, we are down 23.24%, so absolute annihilation. So now it's sitting at $28.67. This is very important when we look at the old video, and it is up after hours at 0.94%, so just basically nothing. So taking a look at the 1-year performance, it's been abysmal, down 37.62%. The 5-year down 30.5%. So terrible performance for this company, even though we have noted some interesting improvements to the business. Now, what happened today? Well, they reported earnings, very abysmal guidance, and actually we'll take a look at, for example, what the heck did Morgan Stanley say? So you see it, I can't point, but that way. Yeah, that way. And so Morgan Stanley actually cut their price target from $61 to down to $40. You can see that and right here. And yes, keeps an overweight rating though on the shares. So yeah, he believes the details weren't as bad as the headline guide down to implies when you peel back. So I cannot believe their price target was $61. I mean, I didn't have anywhere close to that. So I don't know what analysis they were doing, but whatever. So RBC Capital lowered the price. So a bunch of price target cutting guidance, and management in their earnings report, if you actually listen to it, they'll say like, oh, it was the pandemic, oh, it was the war, oh, how can you expect us to navigate all these things? Well, I expect you to, because you're paid really well. But regardless of that, it is a big, difficult environment. So when considering what this business does, we have to take a look at, what do they do? Okay, well, they if you go to a grocery store, you might see the machine in the self-checkout aisle, hence the title, which we are going to shout myself out, the title, Check Yourself Out with NCR. Very cheesy title, very clickbaity. I think I dare you to disagree with that. It got a nice 300 views with that very clickbaity title. Very important. But anyways, I want to actually highlight some of the things I stated, and I hope this is the part. I think they could grow within this range. Okay, so it's right here. And then let's put this at, I think that they could achieve somewhere around 5% growth. I think that's possible. So yeah. 5% growth, the model's saying it's a buy. It's a buy all day, every day. If they achieve anywhere close to 10%, this thing's incredibly undervalued. Okay. So what I'm going to do, or what I'm going to say is this business is interesting enough for me that this is where I'm full of it, okay? I was completely full of it. I did not comply with what I stated in this video. I was actually asked about it in later live streams, and that's what the live streams are for kind of more up to date. And actually what the Discord actually is even better for, because I can kind of communicate what I'm kind of doing in real time if it's something I'm open to sharing. But definitely with this instance, this is a video where I stated that I might have done something, but I ended up not doing it. And some of you might have caught this. The portfolio was already public at this point, and many of you might have noticed it never got in there, but it made it to the watch list. And there was a reasoning as to why that is, because this was kind of like a preliminary thought. And so sometimes when I do preliminary analysis, I kind of just overstepped my skis in terms of what I was saying. And then under more scrutiny, I actually held back on that investment. Turned out to be a very good decision, even though I think they reported earnings and they shot up like 15-ish%. So in the short term, I looked kind of silly for not buying. But of course, I had my concerns, and I stick by those concerns, and turned out well. But here I'm about to say something that I'm actually full of it. I'm going to add a starter position. I'm going to be buying a little bit of this and just watching it. And then if the price gets better, I'm going to be buying more. So my position sizing, I think this is the best part. This is the best part about what I say. I'm going to maximize it at because I do think there is some risk of actual declining or decay. Yeah. So I think they, for example, can grow at 5. Let's put this at 5. Let's put this at 4.5. And then let's put this at minus 2%, right? So with these assumptions, because I do think they could grow within this range, I'm not going to actually add 6.4% of the portfolio to this, but I'm going to add it up to probably around 3%. There he is. There he is. Yeah, he was completely full of it. This stranger right here, completely full of it. Look at that young, handsome stranger. So, yeah, completely just out of touch there. So yeah, upon further investigation, the slightly in the future self of this person decided actually not to go through with it. And actually, those are some things that we're going to be discussing here or revisiting here, because I'm pretty sure I discussed them in a live stream. If I didn't, I apologize. But, that's what everything else is for, every other means of communication. But, this is a still moment in the past. And again, I know that some of you were paying attention to the portfolio and saw that I didn't do what I said in this video, which was add about 3% of the portfolio into it, or up to 3%. I think what I was thinking then was like, I might add up to a point of 3%, because I wouldn't want to make this 6%, because this is definitely not a core holding investment. Now, look at that price target, not price target, but buy price of $26.76 with a negative 2% growth. We're actually going to see that perhaps today. And remember that some of the stuff, if you actually watch this whole video, not this one that you're watching right now, but this video that we're watching together, kind of like an inception of YouTube, right? So video within a video. But if you watch this whole video, I did go over some of the management targets, and actually those targets have actually reined back. So some preliminary thoughts as to the concerns regarding NCR. Well, think about it like this. Well, I've been concerned, for example, about this liquidity crunch thing that we're still going through, the consumer, kind of struggling with all these prices and and all this like. So what does NCR do at the end of the day? Well, they build these machines. They have ATM machines. They have self-checkout machines. All of these things kind of culminate into one key aspect. The health of the consumer is paramount to the future longevity of this business. In order for their customers to be buying more and more machines, investing in more and more of their advanced machines and their kind of software as a service platform as well, we got to have a strong consumer. This consumer is kind of in question if there's a lot of inflation, maybe that their machines are going to be a little bit more expensive on the cost side. So all these factors kind of culminate into one thing that say, in that environment, what I was also stating at the time, NCR did not coincide with a favorable outcome over the short to medium term. Now that, the earnings have kind of come out, and by the way, remember, after stating this video, and I did not add to this position, it did rise a decent chunk. Okay, so I'll actually pull that up here. So, because remember, February 1st, and actually, let me double check, and I'll check live with you guys, because I don't remember if I have a memory that it did do that. Yeah, you see here. So February 1st is when I made the video. So around there. And then we see this massive jump. So it jumped, right here. You see that 20 something percent. So I looked silly for not buying it. And I would have looked really intelligent at the time had I purchased right then and there at 3% and then generated that 20% return and then somehow had the hindsight to just sell, right? Obviously. But there were some cautionary things that, even despite this rally where the market actually enjoyed, and this was again from the earnings, right? Enjoyed or saw a lot of optimism. I got a little bit and then so I just didn't end up adding to it, especially at those prices, because I didn't think those prices were quite favorable for the proposition. Just to again revisit, let's see, the price target was 30, not the price target, price at the day of this video was 37.81. So didn't really enjoy that run up, definitely turned me off from investing, and turned out to be a good decision, because here we are today where the price actually has fallen 23.24%. And if we are interested in this company, maybe now is a good time to add. So we're going to look at it again in the model and kind of get an idea for what the heck's going on. This is a remnants of the Facebook video. Go check out that video if you guys want an update on my thoughts on Facebook. So I won't spoil anything on that. So we're going to add NCR here today, and we're going to let the model kind of, do its thing, gather all the information, and then we're going to do our analysis. Still loading in. There we go. So price target is, you see it's now down to about $40-ish, implying a 41.47% upside. This is a recovery at this point. So if it recovers, you have 41.47% gain potential. All right, so let's take a look at the implicit growth rates in this. So I want to be very cautious or very careful to note that it is a bit cyclical. You see the cash flows are a bit cyclical. We might actually be going through a down trough. So net income is kind of going to be your barometer here, but not really. So we'll go with cash flows because it's not really a financial institution or anything like that. Revenue estimates are actually expected to decline a little bit, but you can see the trend line is rather positive. There has been some improvements over time, which we'll actually take a look at the ratios. Take a look at the Altman Z-score. I don't think this has changed from the last video. It does imply that, there is a bit of ambiguity whether or not the company will go bankrupt within the next 3 years, which is a bit of a concern because we take a look at the ratios. Let's actually minimize it to the 5 years, and we'll take a look at the 10 years. So just to concentrate on this, we do see a current ratio. It's quite healthy, but it has been deteriorating. Take note of that. Total debt ratio has been getting worse. Long-term debt ratio getting worse. Long-term debt to capital getting worse. Debt to equity, see my wave motions. You like that wave? It's getting worse. And basically every metric here in the solvency ratios are getting worse. And DuPont analysis, the margins are getting worse. The operating margins are getting worse. Well, kind of fluctuating. They're kind of better now, but they were worse before. Net profit margin, kind of return on assets, all that jazz. Earnings quality is pretty high consistently, actually. So, and that's why the company actually focuses on free cash flow as a metric, or EBITDA is also another metric that they try to get investors to focus on. So we are actually going to be using cash flows, but ROIC looks decent for something that this business is. So nothing surprising there. Let's take a look at the longer term picture. See, has it been deteriorating or improving? So we're pretty much flat throughout the rest of the year. Gross margins are markedly higher from 2011, but yeah, earnings quality kind of consistently good except for 2013. But anyways, all right, so we're going to go over to the summer report, and we're going to play around with some of these growth rates. Already implicitly, the growth rates, does imply that if we do somehow grow at 15%, that's going to be like a crazy time for this company. But we're going to discount it at 20%, and then we're going to see what can we kind of get away with. So 6% down here. Let's actually just erase these and just play around with each one. So I'd say, for example, if they were to grow at 0%, you can see that there has been some sort of deterioration, because I do believe in the, let's see, yeah, the negative 2% used to be the 26%. So there's been some level of deterioration within the fundamentals. So the prices actually have moved down a little bit. So keep that in mind. So at a 0% growth rate, we're actually not there. And that's actually at the point where I would say it'd be an interesting buy. Now, I'm going to be up front here. I'm probably going to be buying it today, tomorrow. So tomorrow morning, I'm going to be actually most likely, I'm going to be opening up a position at the present prices, a very small position that I will add to over time. Okay, I'm probably going to start at less than 1%, and then I will kind of continue on from there. You guys will see that percentage updated within the portfolio when I click the update button for that capital mindset portfolio. And so I don't share my trades, by the way. So if anyone's asking, I don't share my trades in real time. That's a responsibility that I hope everyone is okay with me not having. Okay. So on that note, but taking a look at, where we are today, and, I'm making this video, you guys will have access to this video before I actually do that move. So, I just want to let everyone know, I guess, ahead of time. You guys, hopefully, if you guys watch this video after the fact, I'm sorry, but the video is available for you guys to see. So on that growth rates, I think 0% is feasible. I think, let's see what happens. Can they grow at 1%? Okay, so if they grow at 1%, they're basically there. But yeah, we could expect that level. Now, the thing is, if we do see that level of dilution, which is a bit of a concern for me because of how they're capitalized, I think that they are not capitalized very favorably. Share dilution probably might be a way for them to, keep employees happy, pay off some employees, and also raise some capital. But, they are capable of doing a tremendous amount of buybacks. Actually, at these prices, I'd say management should switch over to more of a focus, if they want to return any capital to shareholders, to do it through some buybacks, right? And taking a look at, again, the stock here today, it's interesting to see that the price has, performed very poorly, and now the company's market cap is markedly lower. So I think share buybacks would do a good job at, providing those shareholders some or those longer term shareholders with some semblance of, reward. And then perhaps that will magnify if eventually things improve, the sentiment improves. I think that this drastic drawdown is mainly sentiment driven. It's a lot of sentiment drive, and something so small like this, can get hit very hard. It's not a sexy business. Let's be very clear by that. It's not, a very well-known company. It's very small. It's relatively small, but just look at that enterprise value. You can see that the debt is actually a risk. So be very cautious about that. Keep an eye on that. And as always, we're reaching the end of this video. The conclusion I'd state to the risks are the debt. The debt is there. It's glaring. A quick vision to see that is that enterprise value. Boom, it's right there. And really good call out, by the way, because when we were talking, or at least this was in conversation, I guess, separately, but the PE looked really cheap. And that was on an adjusted basis, adjusted EPS. A lot of people would point out about NCR on an adjusted basis, it's cheap. But no, some of the costs were real costs. And the PE, you see, it's still at a 40. But looking at cash flows, it's a different story. It looks cheap on cash flows. Caution on that. And that's actually, the model is actually kind of picking that up, because it's, even though it's cheap, 5 price to cash flow, you can see that, well, everything is about the perspective in which you view the asset. Well, what are the growth rates? You can see that if it does decline from here for the next 10 years, it's not a buy, right? So that's the concern here. So a lot of question marks have evolved. And even after that video, even after this video that I showed you guys, where this individual, this past self, stated that they would add to this position and then never did, I'm kind of filling in that color. That additional information that was gained was that, in this environment, it wasn't a good risk reward play. And it didn't have that compelling feature. You can tell I'm not like extremely excited about this company. It was on my watch list because I like sometimes businesses, not sometimes, I do like businesses that are kind of overlooked by the market. This is definitely one of them in my personal opinion. But and it's one that I think has a bright future, because I think self-checkout is here to stay. I think there's going to be more and more and more of that. However, it is a fierce competitive environment. You have a lot of competitors that, can easily just start to compete with you. So just keep that in mind. Just keep that in mind. And again, like I said, it might enter my portfolio. I want to be very clear with that. It might. I might not actually buy this position, because there's other stocks that I really want to allocate capital to, and then kind of keep my cash position, manage it well, where I'm not, overly aggressively adding here, but I do want to add to those other positions right now. So just keep that in mind. I want to be, again, transparent in that regard. All right. On that note, guys, thank you guys so much for watching, and hope you guys enjoyed me kind of roasting my past self, or kind of being full of it there. But on that note, guys, I hope to see you on the next one. If you guys like this video, you know what to do. Hit that like button, subscribe if you're not, and yeah, we'll see each other again.